Hello, everybody. In the current affairs this week, the week ended 17th of March 2024. The first and the most important, the Indian stock markets. The Indian stock markets, Nifty was down by more than 2%. Nifty mid cap was down by 4%. And Nifty small cap was down by more than 5%. So the entire stock market in India suffered a very serious correction. But the most amount of damage which was done was on the small cap side of the market. And that was the side of the market which appreciated the most in the recent few months. And now is the time where the correction in respect of the small cap and then the mid cap is happening. The FIIs were very little participants in the overall activity of the Indian stock market. They were sellers to the tune of around 800 crores. The DIIs continued to be the buyers to the extent of more than 14,000 crores from the Indian stock markets. The major sectors which suffered in this decline on the stock market in India were the ones which were the biggest gainers in last few months. The maximum fall was suffered in Nifty Realty, which was more than 9%. Nifty PSU banks was down by around 8%. And Nifty oil and gas was down by around 6%. There is no doubt about the fundamentals and the future of the Indian economy. Everybody is quite robust about it. But the way the valuations have run up in the recent times, especially in the last few months, it is a correction of those valuations which is happening. And to a certain extent, it is said that there is a good amount of froth in certain quarters of the small cap segment of the stock market. Major multinationals who have got substantial presence in India have also started looking at divesting their stake in their Indian counterparts to a certain extent by booking certain profits. This week, 3 major multinational companies, the first being ITC, where MAT, the biggest shareholder outside of India of the company, sold a very substantial amount of its stake. Then it was Whirlpool, and then also Timken. They sold their stakes in the Indian subsidiary without diluting control, but tried to encash on the steep rise of the valuations of their Indian arm. All these things give an indicator that Indian stock markets are richly valued. But the fact remains that markets which are driven by solid fundamentals and growth and good quality of governance always command a premium. Let us see how things take turn in the coming weeks, especially in the times when the elections have been announced. As far as the global commodity markets are concerned, the Brent crude was up by around 4%. Gold was on a little softer note, down by 1%. Silver was up by more than 3%. as far as the US markets are concerned, we all are expecting that the interest rates in the US would soften. But what happened this week was to its contrary. The US 10-year GSEC yield from 4.07%, it spiked to 4.30%. Nasdaq this week was a little softer, and so was the case with the S&P 500. Another encouraging news for India was that the direct taxes collection, whatever was budgeted in the year, which is supposed to end on 31st of March 2024, it got revised upward in the recent budget, which was, or rather the interim budget which was placed. And to our utter surprise and a pleasant surprise, that even that revised estimate is going to be surpassed. And there is a year-on-year growth of more than 14% in the direct taxes collections. This week, Saudi Aramco, the biggest producer of crude oil in the world, declared profits which were a decline of 25%. This is on account of lower crude prices and lower volume of crude sold. This indicates the trend which is in the offing on the energy front. Thank you.